Uh, ja,
Ja, Leffi, daar is hij zo. What's wrong, love? Don't do that on the wires. Wires.
Hola and welcome. Guys, it is part 7 of our 12-part business growth program, and we are motoring through all the modules. I got to pinch myself. I cannot believe that we're at this stage already. So it is part 7 of our 12-part business program. Can you imagine? Now, this week is quite an exciting one. We are talking about a topic that hopefully is not a swear word for most of you. Um, I I know that sales is a swear word for some of us, but I'm hoping by the end of this course that you will embrace sales, you'll love sales. And I know after today's session that you are going to have a different mindset about finances. Now, the interesting thing about what we're going to chat about today, which is the fundamentals of finance in your startup business, is I'm not going to teach you finances. Oh no. I'm not a financial guru, I'm a business owner. But what I'm going to do in this session is highlight the important elements of what you need to know in your business when it comes to finances, and we're also going to cover important terms. So I want to reiterate, I'm not going to give you any form of financial training. I'm going to show you what you need to know in your business as a business owner, as an entrepreneur, as a consultant, because ultimately we want to run a profitable business. And how do we do that? And we're also going to cover very cool terms that you should know. So when people bandy about bottom line and ROI and whatever, that you know what this is all about. All right, so this is quite a cool session. And please, I want you to stay active. I want you to participate. Keep commenting, keep asking questions. Our moderator will help us. And I also know there's a few people in the audience today who have quite a bit of knowledge when it comes to this topic. So we are not alone. We are not alone. And we're going to make this fun. We're going to make it interesting. Because if you don't know what's going on in your business, how are you going to run a successful business? So we spoke about 2 sessions back, sales fundamentals and sales being the cornerstone of your business. And we spoke about understanding how to position yourself, knowing your target market. And finances is another important corner of this. You know, for this, again, for this foundation to be strong, for this foundation to work, we really, really need to know what is happening in the financial side of our business and what can we do, what can we change to turn a business that's running at a loss into a profitable one. Comment, question, ask, share thoughts, experiences, whatever in the comments section as we go along. Remember to toggle between top chat and live chat to the right of your screen so that you can see live comments come through in the moment, that you can participate and be a part of it. Guys, I want us to stay energized in the session. I want us to stay motivated. I want us to stay focused. Our takeaway is to have a better understanding, to be more financially literate, if you will, and have better financial knowledge when it comes to our business. So let's get going, but let's keep the energy going too, and let's keep it exciting. All right, so we need to absolutely, first of all, understand key financial terms. And I know it's a lot of info on one slide. Bear with me. There's a few of these slides. But we need to have a sound understanding of financial terms. So accounts payable and accounts receivable, to me, it's pretty self-explanatory. With your accounts payable, it really is money that's going out, money that you owe, so you got to pay it, and accounts receivable, money coming in that's due to you for goods and services that you've either supplied or sold. If you are familiar with these terms, in the comment section, let me know. Accounts payable and accounts receivable. That's a mouthful. Okay, an asset. Now, I'm sure most of us did accounting for a short period when we were in high school. So there's a few terms here we're going to cover that should be familiar to you. And if you are investing in your private side, you know, in your personal life, if it comes to investment, then you should also have a good idea of a couple of the terms that we're going to cover now. So an asset is anything that can be tangible, intangible. Interesting enough, this could be a business website is one of them, cash in the bank, your computers, furnitures. So it's anything that is an asset that will bring value to the business. Okay, I did say there's a few of these, so let's go. All right, your balance sheet. A balance sheet really, it's a snapshot of your financial status right now in the business. But it's very, very important. All right. So it's very important that we understand balance sheet. A balance sheet is a snapshot of your business right now, what the standing is. Bank recon, which is a reconciliation, is taking the transactions in your business and comparing it to your bank statement. It's as simple as that. So making sure that the two marry up. Bookkeeping, this is an act of um, really recording transactions in the business, but it's recording it in a chronological order. And then your bottom line. Now, this term you're going to find being banding about quite often. Your bottom line ultimately is your net profit. And we want to make sure that your bottom line is profitable. We are going to cover a couple of elements that I think are important to the finance and the fundamental part of your startup business. So we're going to cover those shortly. But bottom line is very pertinent when it comes to cash flow, running profitably, making sure that what you're offering is of value. But guys, why did you start your business? It's to make money, isn't it? Yes, it's to help others, it's to bring value, it's to solve a problem. Maybe it's a problem that you experienced, and that's why you started your business because you couldn't find a solution. So you created a solution. However, we want to make sure that we run our businesses profitably. Bottom line. That's the bottom line. Cool. Credit. So we are familiar with credit and debit, I'm sure. And again, it's something that we would have covered when we did accounting in high school. So your credit's always recorded in the right-hand column, your debit in the left-hand column. Well, it'll be opposite for you. All right. Your credit is anything that is incoming that's positive, and if there's increase in your equity, your liability, then there should be a corresponding decrease in the asset or expense account. And the same with the debit. When you record it in the left hand column of your journal, then there might be increase in the asset or in the expense account, but then there should be a corresponding decrease in an equity or liability or income account. All right, so there's always that balance. Then your current liabilities could be anything like debts or loans, any other obligations that you've got to pay within that financial year or calendar year. Okay, equity. Now, equity, that's what has been invested in the business minus the business's liability. So it's the assets that the owners have brought to the business. And essentially, your equity represents your company's net worth. Expenses, I want to say are self-explanatory, but these could be anything like your cell phone bill, internet, which was your Wi-Fi, if it's, I don't know, travel, postage, that kind of thing. Although for me, postage is kind of weird in this day and age, but we still refer to it because I suppose under postage would be courier costs, your travel expenses. Then your liability is everything that the business owes. Not owns, owes. Okay, so this could be your electricity bill. It could be money that you owe to suppliers and vendors. Those would fall under your liability terms. Margin, we speak of margin as actually your profit margin, and we have your gross profit and your net profit. One is before all deductions have been taken off, all expenses, the other one post. So your gross profit and your net profit margin. Then your profit and loss statement, which is also known as income statement, which will show money coming in, revenue, and money going out, expenses. Are you guys still with me? I understand it's going to be a meaty session, but you need to understand that you need to understand the finances in your business in order for you to run a successful business, a sound business, a sustainable business. Preferably running a profitable business, you need to have these fundamentals in place. All right, so there's a lot of terms that we're going to cover. I've highlighted a few that I felt was important. Trust me, there's a myriad more. I've extracted a few from the list that you can find anywhere. I'm sure if you research, you'll find a huge load, but these are ones I've extracted. One that you should be very familiar with is return on investment, ROI, and are you getting money? What returns are you getting on money that you've invested? Let's say, for example, that you have allocated 5,000 Rand for a marketing campaign on Facebook. what is the return on that 5,000 Rand investment? You've invested money into your business to market it, to bring more clients on board. And let's say out of that marketing campaign, you were able then to sign up 3 retainer clients, each at 10,000 Rand, which means there's a 30,000 Rand return, less the 5,000 that you've already spent. So there you see an immediate result of money that you've invested. So return on investment. Return on investment could also refer to time, energy, focus. It's not necessarily just money, because you can invest time in someone, you can invest time in a project. So you want to see return on that as well. So that's ROI. All right, hey guys, it's the last slide on financial terms. All right, so revenue, money, 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 money. So this is money that's coming in. Isn't that awesome? Revenue. We want to see revenue in the business. And this is from what goods and services that you have sold. Tax deductions is costs that you can deduct to reduce taxable income, and then you have write-off. So tax write-off, for instance, a corporate that would send the entire sales team to a 3-week conference, anything that they spend there could be written off for tax, as an example. Okay, are you guys with me? In the comments section, let me know if you are familiar with most of the terms that we discussed now. I'd love to hear your thoughts. I also want to make sure that we are still with me in this session. Guys, I cannot iterate enough how absolutely important it is for you to know your finances and your financial situation in your business. Yes, absolutely, you need to know your personal financial situation, but your business, there's a lot more responsibility. There's people that are looking at you. There's people who want to join your team, people already on your team, and so your responsibilities have increased tenfold. And therefore, you need to have this kind of insight into your business. Don't run blind. Don't be ignorant, and don't use excuses of I did not know. So let's get your financial house in order. Let's make sure that once we have completed the session, you have a better understanding of financial terms that are pertinent in your business, and that you have a lot more financial knowledge. I'm not asking you to become an accountant or a bookkeeper. Heck no, that's not your job. What we're going to take away from the session is to help broaden your horizons and encourage your mindset into a space of embracing finances and having a sound understanding of it. Okay, so I don't want you to go out and go do an accounting course. We're going to cover how exactly we're going to do the accounting side of things, but it is important that you are aware of what's going on in your business right now. Okay, I have highlighted 6 elements that I feel are very fundamental to having a sound understanding of the finances in your business. And for me, it's your business plan, revenue and expenses, how to implement proper bookkeeping, how to encourage cash flow and to have cash flow, having payroll that works, and tax. So for me, these are the most important 6 elements, and we're going to break them down right now. So if you want to take a moment, take a look at this slide, and in the comments section, write down for me which one jumped out at you first. And I think for me, if something jumped out at you immediately, like the cash flow thing, then it means that we need to take a look at your cash flow. If it was payroll that jumped out at you, then maybe it's something you've been thinking about of late that you haven't gotten so far as to implement. So in the comments section, let me know which one of these 6 points jumped out at you. Okay, cool. All right, to break it down, your business plan. Now, your business plan, for me, I prefer the lean canvas. It is a far more condensed version of a business plan, but there is importance and value to a business plan. And one of the most important things is when you're starting out, you might require funding of some sort. You might want to make a loan down the road, or you want to use a document to help keep you accountable so that you reach every milestone in your business to ensure that you run a successful business. So your business plan is your roadmap. And your roadmap is going to tell you that okay, Wendy, you have now achieved these three things in your first quarter. Well done. The business plan, you said you're supposed to achieve these four things, but it's not to worry because you've got another quarter and there's two more things that you need to achieve there. So now you can achieve these three things. So your business plan is going to hold you accountable to reach those milestones. Your business plan is also going to help you plan for the future and manage your cash flow. By that, we mean the business plan will help highlight that if you're offering products one and two right now, that somewhere from month 6, you want to incorporate products 3 and 4. So you have left room for growth there. We are focusing on products 1 and 2 now, rolling that out, getting revenue from that, getting clients on board and paying for it. And once we have done the first 2 quarters of the calendar year, we're then going to start implementing products 3 and 4. So again, the business plan is going to help us plan for that, that it will help us plan for scalability, that in the next year, we want to have grown from a team size of 5 to 20 members, for instance. I have now taken the business plan and broken it down into 8 elements, and you'll see as we go through these 8 elements, it's pretty standard features for a business plan. And the first thing is the executive summary. Again, what is the importance of a business plan? One of the most important things is you're going to have a business plan in place to take to an institution or a private investor if and when you want to get funding or a loan for your business to help with building more product or inventory, getting bigger shop space, or building that website into an e-commerce platform. All right, that is why you have a business plan. So the executive summary is going to detail the legality of the company, the geographic location, what services does the company offer. Your competitive analysis is very important because you need to understand where are you placed in the market, where are you positioned, and you need to understand where your competitors are positioned. You need to understand what products and services they're offering in your space. If possible, you need to understand their pricing model so that you can put your pricing model together. And by that, we don't mean go and undercut your competitor. We need to understand where the positioning is so that you can bring the right value to your target market. And the target market is an important element of a business plan, and it's something that we covered in depth in part 2 of our brand culture session, where we spoke about positioning, but also understanding your target market. If you don't understand what product or service you're offering to whom, what pain are you solving, and why they should take a look at your solution, not your competitors, then you don't know your target market. And if you don't understand your target market, then everything else is going to fall flat. We keep on speaking about having a strategy, and write this down. You need to have a strategy when it comes to sales, when it comes to marketing, when it comes to your finances. When it comes to understanding your target market, you need to have a strategy. Guys, if you don't have a strategy, then your marketing campaign becomes completely ineffective. Your sales campaign becomes ineffective. Because if you are flinging mud at the wall and nothing sticks, it means that you did not plan, i.e., you did not have a strategy. So in order for you to understand your target market, you need to have a strategy, because that ultimately spells out what platforms you're going to feature your product on or your service, who you're going to speak to, the kind of collateral that you're going to put out, and how that sales conversation is going to evolve from there. And this is an important element of your business plan because it's another fundamental part of successful business. You need to know the description of your sales and product, or your services and product rather. So you need to know who are you offering your product to, how it will help them, and what other products or services you can incorporate as you go along. Business plan will definitely include your management team. Okay, in the comment section, let me know if at the moment you are a solopreneur or if there's more than 2 of you on the founding team. And it's important that we know for the business plan, particularly, how many people there are and their skill set. Because again, if you're going to take this document to an institution or a private investor to request funding or a loan, they're going to want to know everything. And they're definitely going to want to know about your management team. They're going to want to know where they studied, what their skills and experience are, what they bring to the table, what part of the business they manage. I can also share something with you that if you're going to go to an investor, they are going to give preference to a management team that is more than one. The reason for that is because you cannot do this alone. It's hard graft, guys. You know it. Being an entrepreneur, it's tough. And we need that support structure. Plus, we don't have all the skills ourselves. So make sure that you, as the co-founder, you take care of one part of the business where your strengths and passions are, and the other founder will cover the other part. So whether you're strong in sales and people and your co-founder is strong in strategy and vision for the business and taking it to the next step, then that holistically speaks better to investors. So if you are a solopreneur right now, don't stress, it's all cool, but it would be good to potentially look at a partner should you want to get investment, particularly. Funding alone, not so much, but funding definitely. And we make sure that your two founders cover the two parts. So it's very important that we cover the management team in the business plan and that it paints a very healthy, reliable picture of the founders and of the business because we want to make sure the business is reliable, sustainable, and that there's legacy. The business plan will also help with financial projections, i.e., that you want to increase your online sales in the next 6 months to 25%, for example, or you want to reduce your expenses by 10% in the first quarter of the next calendar year, whatever the case is. So your business plan is going to help you with those projections. And then the risk factors. This part is very important again, should you be going to look for a loan or investment, because you have to let prospective investors know what risks could they potentially see in your business because they're investing money in it, guys. They want to see a return on their investment. All right, so you need to let them know if there's possible legal pitfalls in your business, if there's maybe a lacking in team, whatever the case is, that there is certain risks. Don't be shy to put them in the business plan because it is part of business, it's part of your growth. All right, the second element that I feel is very important to having financial understanding of your business is revenue and expenses. Now, we call it tools. So the tools to achieve this is to have your balance sheet and your profit and loss statement. Your balance sheet, again, will give you a snapshot of where you are currently in your business financially. Profit and loss, are you running at a profit? Are you running at a loss? Guys, in the comments section, let me know. Is this something that you're currently using? Are you or your accountant implementing and using the benefits of a balance sheet? And are you working according to a profit and loss statement? So do you know currently if you're running at a profit or you're running at a loss? Let me know in the comments section. I'd love to hear where you are right now financially in your business. Now, part of the revenue and expenses, there's a lot of accounts that we need to keep track of. And these are pretty easy to keep track of. And I say easy, record keeping would be cash, it's inventory, it's accounts payable and accounts receivable. It's your payroll, it's purchases, so where you're spending the money, it's your sales. So it's knowing what deals are you closing every month, what deals do you have on the table. You need to have the sales in order to generate that revenue. You need to keep track of loans payable, of your owner's equity. So how much and what each founder of the business has brought in to the business, and retained earnings. So retained earnings refers to profit that the business made, but not extracting it, but reinvesting it into the business. Okay, proper bookkeeping. Now we need to absolutely take note of the importance of implementing a sound and, well, really a proper bookkeeping system, isn't it? In the comment section, I'd love to hear, guys, who of you have a bookkeeper on board at the moment? Or are you doing your own bookkeeping? So for me, there's 5 steps to help us kickstart our bookkeeping. And you might think it's obvious, but the first one is have a business bank account. You know, when you start out, you might that there's no real importance in separating your personal finances to your business finances. It can get messy. Rather, as soon as possible, if you haven't done so already, get a business bank account. You want to absolutely separate your personal finances from your business finances. One. Two, if you have a business bank account and you're going to take your business plan to a possible investor or to get a loan, they're going to want to see statements from your business bank account. All right, so it's important to have that account. Oh, and obviously, I say obviously, but the other reason that you would want to have a business bank account is that it's subliminal, it's that psychological thing. But what does it tell people who you're sending invoices to? That you're a stable business. Yeah, for the long term. You are a serious business because you have a business bank account. And I'm not saying that you're not serious if you don't have a business bank account. It's just one of those subliminal things when you send out the invoice and people see that kind of detail. The next thing that will help kickstart your bookkeeping is you need to understand and then choose between accrual accounting and cash accounting. Quite simply, your accrual accounting is that you record something, the transaction, irrespective of when the money comes in for the service or good that you have sold, whereas cash is in, when the cash comes in. So those are the two systems, and I know I'm making it very simplified. That's the whole idea. I don't want to overwhelm you with info. So go and do your research on whether accrual, so waiting for, sorry, accrual is when transacting immediately, recording the transaction immediately, or whether cash, only when the money comes in to record it. Which one will work for you and your business? So go do your research on that. Then the next thing is whether you're going to use single or double bookkeeping methods. So the double entry is, let's say, for instance, I run a virtual assistant agency. I get money from the client, and then I've got to pay the VA. So there's that double entry. All right. So that's again something that you need to go and take a look at and see which method will work best for you. You need to categorize your transactions, and very simply, that means if you're going to spend money on travel and accommodation, you're going to put it in the travel and accommodation box. If you're spending money on marketing, it goes into the marketing box. If you spend money on, I don't know, groceries for the staff, so let's say coffee, tea, toilet paper, that kind of thing, does it go to staff expenses? So you'll know what boxes you need there. You can create your own, but you need to categorize them to keep track of everything. And then we need to record, post each transaction as they happen. There are tools to do that, there's software to do that, but you need to understand your business. And if you don't have that kind of insight, then go speak to a consultant who is au fait with accounting, or a bookkeeper that can help you determine which way is best for you. Cash flow. Ooh, cash flow is king. All right, so we want to make sure that we have cash flow in the business. And cash versus profit, you have your cash balance, you have your cash receipts, and you remove your cash disbursements. So that means any expenses, things that you owe. And then what you're left with is either cash surplus or cash deficit, which either means it's a negative or a positive. Right, so take a moment if you want to. I'm going to give you a couple of seconds to write this down. Your cash flow, we're looking at your cash balance. You add your cash receipts. You remove or deduct any cash disbursements, so things that you have to pay expenses, and what you're left with is either a cash surplus or a cash deficit. So again, either meaning you at a loss or you at a profit. You're in the negative, you're in the positive. To have a sound cash flow system in place, we need to create a business budget. And the first element of a business budget that works is to set long-term financial goals. And that could be anything from increasing your revenue at certain milestones, incorporating new products and services, again, which mean increasing revenue, downsizing certain parts of your business, automating, reducing expenses, whatever the case may be. Then you also need to estimate your monthly expenses and revenue. And I know, guys, things change from month to month. So when they say estimate, we're looking at things like Let's say you're hosting with Hetzner, your internet is with Telkom, your mobile phones with MTN. You have to pay for accounting software. So these are elements that you know that you have to cover in a month. And let's say all those goodies add up to 8,000 Rand. And you know that your income is set at the moment because you've got two retainer clients, each at 7,500 Rand, it's 15,000 Rand. So you deduct the expense of 8,000 Rand from the 15,000 Rand, you're left with 7,000 Rand. So you need to have an understanding of what does my monthly expenses look like? And it's going to change from time to time because it might be that you upgrade software, you upgrade certain plugins for your website. These could be once-off things, but they do happen. So we just need to make note of that. We need to track our finances. We need to keep record of everything. And if you hate admin, oh man, this is going to be a challenge for you. All right. And this is why, and you'll see, Nana, how we're going to handle this. But it's important that we keep track of every financial transaction in the business. Another thing that we can do to increase our cash flow and to look at a really positive business budget is to involve the team. So get the buy-in from your team members and say, guys, we need to make sure that for the next 3 months that we're running at an absolute profit. So it's for you, the e-commerce person, we need to make sure that our e-commerce website's up and running, that there's no glitches there. The marketing team, we need you to drive a marketing campaign to our online shop and so on. So we need to get the buy-in from the team to help with this. Again, you're not alone in this. It's your team and you that's going to make a success of it. But you also need to get them to buy into this. And then we can look at adjusting, repeating the cycle. So really what that means is after you can determine 3 months or 6 months, you're going to look at how you manage the past period, what needs to be tweaked, what can be changed, what information did you miss, what data do you require, and then repeat it for the next 6 months and make it better. All right, now we're going to chat about how to stimulate your cash flow. And guys, in the comments section, let me know. Cash flow, money, money, money. Are you still with me? I want to hear your thoughts on what you do to stimulate your cash flow and to keep your cash flow positive. One of the things that I've highlighted here is to get your payment as soon as possible. And the best way to do that is to invoice immediately. So the sooner you get your invoice out, then it necessarily follows that the money should come in sooner as well. The other way that you can stimulate your cash flow is to encourage upfront payment. And especially if you're offering a consulting service, or let's say, for instance, you're designing a website or you're doing some form of graphic or marketing work, is to ask for a deposit, whether it's a 50% deposit or 75% deposit, or to get the whole amount upfront, but get the money in. There's an expression that says there's skin in the game. And for you who's providing the service, and I'm speaking particularly about a service right now, if you're providing the service, you're taking all the risk. So you're sitting down, you're spending the time and the energy to design a logo for someone. And then you deliver it and they don't pay and they walk away with your logo and they get it copied somewhere else. Cover yourself. Get the money up front. And if you're too shy or you're not sure about asking for all the money up front, then get a deposit. But your client needs to have skin in the game as well. As much as you do, so does your client. In order to stimulate your cash flow, you need to get that money up front. Negotiate with suppliers. So if you have a cleaning company and you are buying detergent bulk, if it's hand wash things and floor cleaning goodies, and you buying it in bulk, then negotiate terms with your suppliers and ask them if you can pay them in 90 days and in 60 days. Because remember, and that's the next point, inventory ties up your cash. So the more money you're spending on buying inventory, i.e. your cleaning goodies for your cleaning company, the less cash flow you have. And if you negotiate terms with your supplier that you can only pay them in 60 days or 90 days, wonderful, because then that means at least you have some form of cash flow. And then obviously we need to take a look at our business budget, which you spoke about previously, and make sure that we implement an effective business budget. All these things are going to help stimulate cash flow. Payroll. Okay, so if you are more than one person on the team, you are going to have payroll in place. And there are three ways of doing payroll. You can either do it yourself, DIY, you can get your accountant to do it, or you can outsource it to, I want to call it a payroll house. So an HR consultant or anyone else who their speciality is focusing on payroll and doing that on behalf of companies. But I want to call it a payroll house. Okay, so those are the three options when it comes to payrolls. Do it yourself, outsource it to your accountant, or outsource it to a payroll house. In the comment section, guys, let me know. When it comes to payroll, are you doing it yourself or are you outsourcing? Would love to hear. However, as with anything in life, there are pros and cons. So we need to look at what are the pros of doing it yourself. You have insight into the business, you know what's going on, so it's easy for you to do. The con is it's time consuming. The pro of outsourcing it either to an accountant or to a payroll house is they're experts in the matter, they understand taxes and regulations and compliances, they're doing it, they've got systems in place, and they can do it effectively and efficiently. The con might be, and for both, it's expensive. Accountants, they're pricey, and we don't know unless you shop around the payroll house what their fees are. Something else to consider also is the matter of security and confidentiality, that they have that kind of thing in place. Make sure that your data is secure and that your employees' information is secure. Tax. All right, so this is the last element for me when it comes to having sound understanding of the finances in your business. And you have business taxes. You should have a business tax list, a checklist. So either your bookkeeper, your accountant, or you should have a checklist of when taxes are due, returns, whatever the case is, that you make sure that and I'm going to bring this in very quickly, so your SIPC is renewed on time, all those things, that you have a checklist to help remind you, because this part is very admin driven. We want to say a checklist is a great way to just help keep everything top of mind, that once a week or whenever you check the checklist, see, okay, what is due, when is it due, and either you can remind your bookkeeper or send it to the bookkeeper that they can execute. Then you have tax write-offs and tax deductions. These are all on the business side. And on the employees side, oh, before I get to the employee side, see, I'm getting ahead of myself here. On the business side, you have your corporate income tax and turnover tax. Turnover tax was implemented recently for businesses who are doing less than R1 million turnover. You have dividend tax, and then one that we should all be familiar with is your value add tax. And then for employees, we have your pay as you earn and your unemployment insurance fund, your UIF. So you guys are more than likely familiar with those terms. I'm not going to delve too deeply into those. And the skills development levy, which might be something new that you've only heard of right now, is for, I want to say almost for management, because it's people who are earning more than 500,000 Rand a year, where they go and upskill themselves and they go and study and whatever, that they are allocated this kind of tax. Alrighty, guys. Finances, having sound financial understanding of a business is so, so important. And we've covered 6 elements, and it's elements only of what you should have in place to make sure that you are running a profitable, sound business. There's a lot of those elements that can be broadened out and delved into, which I'm not going to do because I want you to go and do it. I want you to go and do your research. I want you to go and consult with your accountant, your bookkeeper, and I want you to make that information DNA. So it needs to be a part of you. You need to know your numbers. If I wake you up in the middle of the night and I'm shaking your shoulder and I say, hey, Roger, what are your numbers? Are you running at a profit or a loss? What sales are you expecting this month? What have you invoiced? What's your turnover? What do you expect your turnover to be in 6 months' time? All those things. You need to be able to reel them off. Okay, so you need to know what's going on in your business. You need to know the numbers. It's so important. You don't have to do the numbers. You can get someone else to do that, but that's why we outsource. But you need to know the numbers. You, as a business owner, the buck stops with you. So you need to know those things. No excuses. No, I did not know, or I wasn't informed, or whatever. Guys, you got to make it your business to know what's going on in your business. All right, so that's quite a meaty session. There's a lot, I'm sure, that we can chat about in the comments section. So I'm going to join you there now. We are going to chat more about these 6 elements. I know we covered a lot of financial terms, and trust me, there's so much more. I extracted only those that I felt were important for you to know right now. So let's hop on over to the comments section and chat. Give me your questions. Let's share thoughts and ideas, and let's rally around problems that we may have. So I want to thank you for your time. I want to thank you for sticking with me through this. I appreciate it. And I'm going to see you over in the comments section. Thank you so much, and cheers for now.